lithium prices crashed 80% from their 2022 highs. The biggest producer lost 60% of its market cap. Wall Street called the entire sector dead. Then prices doubled in 6 months. Demand is up 30%, and the IEA just projected a 40% supply shortfall by 2035. This is the most hated commodity trade in the market, and it might be the best. The lithium crash was brutal. In 2022, EV mania pushed lithium carbonate to over $80,000 per metric ton. Every miner expanded. Every automaker hoarded. Every analyst predicted a supercycle. Then the bubble popped. China flooded the market with cheap supply. EV adoption slowed in the West. Prices collapsed to under $10,000 per ton, a drop of over 80%. Albemarle, the world's largest lithium producer, went from $320 to $110. SQM, Livent, Piedmont, all devastated. Mines shut down. Capital expenditures were slashed 65%. 15,000 workers laid off across the industry. By mid-2025, nobody wanted to touch lithium stocks. That's exactly when smart money starts paying attention. Lithium prices have nearly doubled from their lows in the last 6 months. Lithium carbonate surged from $11 per kilogram to over $16 in a matter of weeks in early 2026. And the fundamentals explain why. Global lithium demand hit 1.6 million metric tons in 2025, up over 30% year over year. For 2026, Albemarle projects demand growing another 15 to 40%. Global EV sales exceeded 20 million units last year. And here's the catalyst nobody expected: stationary energy storage. Grid-scale battery deployments more than doubled in 2025. AI data centers, renewable energy smoothing, and grid resilience are creating an entirely new demand pillar beyond EVs. Lithium isn't just a car battery metal anymore. It's critical infrastructure. The market is shifting from surplus to deficit. Goldman Sachs projects lithium carbonate reaching $13,000 per metric ton in 2026 and climbing further. The IEA forecasts a 40% global supply shortfall by 2035, and by 2034, lithium supply could trail EV demand by 572,000 tons. Albemarle is the cleanest way to play this. They own stakes in the world's highest-grade lithium deposits: Greenbushes in Australia and the Salar de Atacama in Chile. They've cut $450 million in costs. They're projecting 2026 net sales of $4.1 to $4.3 billion, and EBITDA approaching $1 billion. The stock recovered from 110 to roughly 174. Analyst targets range from 153 to 245. If lithium hits 20,000 per ton, EBITDA could recover to 2 to 2.5 billion, and the stock re-rates dramatically. The Inflation Reduction Act is Albemarle's secret weapon. US.sourced lithium qualifies automakers for EV tax credits. As foreign entity of concern rules tighten, Albemarle's domestic supply becomes irreplaceable. Now the risks. China dominates lithium refining. Sodium-ion batteries from KAL and BYD could reduce lithium demand by 20 to 30% in entry-level vehicles and storage. Solid-state battery breakthroughs could cut lithium content per kilowatt-hour, and the spot market makes earnings wildly unpredictable quarter to quarter. So what's the chaos capital take? Lithium is the most contrarian commodity trade on the board. Prices crashed 80%. Nobody wants it. But demand is accelerating from two directions: EVs and energy storage. While supply was gutted by years of underinvestment, the market flips into deficit this year. Albemarle is the safest way in. Lowest cost producer. Best assets. IRA tailwinds. For more aggressive exposure, SQM, Piedmont Lithium, and the Global X Lithium ETF give you broader coverage. Buy when everyone is selling. That's the chaos capital way. Every commodity supercycle starts the same way. Prices crash, supply gets killed, nobody wants to invest. Then demand catches up, and there's not enough. That's lithium right now. The question is whether you buy the fear or wait until it's obvious. The capital markets are chaos. Embrace it, and I'll see you in the next video.